First day I bought stocks was March 12th, 1941, 42. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening, and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably, you're going to buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own. American Express, we've owned it for 20 years. Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then you're good luck, basically. You don't. I don't think anybody knows what the market's going to do. I think you do know whether you're making an intelligent purchase at a given price. Everybody, when they buy a stock, if you're going to buy, say, General Motors that has 1,400,000,000 shares out, you should be able to take a yellow pad like you have there, and on one page say, let's say it's selling for 30. It isn't selling that low, but that'd be 42 billion. You should say, I am buying the General Motors company for $42 billion because, and you should get it on a piece of paper. And then if you want to have a separate piece of paper, it says, I think I know what the stock market's going to do, so I know whether it'll be higher or lower in it. But you don't. Forget about the market. If you can predict the market, you don't need to read balance sheets. You don't need to read anything. You certainly can't predict the market by reading the daily newspaper. That is for sure. And you certainly can't predict the market by listening to me. But you're buying businesses. And people, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business or an investment in a farm or investment in an apartment house. But it isn't. If you get your money's worth in terms of future earning power over the next 10 or 20 or 30 years, you're going to have made a good investment. And you can't pick them from day to day. If you can do that, you can, well, I haven't met anybody yet that knows how to do it. Edgar Orton Smith set out to write a book on bonds versus stocks. And he said if he went in with the idea that bonds would be a better investment in times of deflation and stocks would be a better investment in times of inflation. And the first line of his book was to say that he'd been wrong. But he had enough sense to look at his evidence. I think Darwin said if you found evidence that was contrary to what you already believed, write it down in 30 minutes or your mind will just block it out. I mean, people have a great resistance to new evidence. And he said, if a stock yields 4% and a bond yields 4%, which was what he was talking about then, the stock was going to outperform the bonds because there were retained earnings that were building beyond that yield. And that had been true for a long, long time, but nobody paid any attention to it. We don't get rich on our dividends that we receive, although we're happy to receive them. We get rich on the fact that the retained earnings are used to build new earning power, repurchase shares, which increases your ownership in the company. And Berkshire has retained earnings ever since we started. That's the only reason Berkshire's worth a lot more, is we retain earnings. A stock can be a good buy or a bad buy. A bond can be a good buy or a bad buy. It depends on price. If you look at the present situation, we've talked about this before, that you get more for your money in stocks than bonds. That doesn't have to be the case. I mean, but it's usually been the case in America, very usually been the case. And if you buy a 30-year bond today with a yield 2%, you're paying 50 times earnings for an investment where the earnings can't go up for 30 years. Now, if somebody said, I want to sell you a stock that's at 50 times earnings and the earnings can't go up for 30 years, you'd say that doesn't sound very good. Stocks are way better than 30-year bonds. I mean, that's clear. And that's one of the alternatives people have. People really have three basic alternatives: short-term cash, which is an option of doing something later on; long-term bonds, or long-term stocks. And stocks are cheaper than bonds.
Bitcoin.
No, I do not own one. I don't own any cryptocurrency. I never will. And in the end, I may start a war on currency. Maybe I can create one, and I'll say there's only going to be 21 million of them, and you can have a little ledger sheet from me and everything that says you have it, and you can have it after I die, but you can't do anything with it except sell it to somebody else. And the interesting thing, of course, is that Bitcoin's been out there a long time, and people talked about how it would be used in various kinds of exchange, but none of our companies are doing business in Bitcoin or anything. Bitcoin has been used, I think, to move around a fair amount of money illegally. So the people
or maybe in countries where you have a
so the logical move from the introduction of Bitcoin is to go short suitcases, because the money that was taken in suitcases from one country to another, suitcases will probably fall off in demand. I mean, so you can look at that as the economic contribution of Bitcoin to the society.
Berkshire has now underperformed the S&P 500 on 1 year, 3 year, 5 year, and 10 year marks.
Yep.
Is that because it's too big, and will it ever be able to outperform the
Well,
S&P?
certainly being too big is part of it. But I would say this, during that same time, I mean, last year, we achieved, now I don't like it, GAAP earnings very well, but we achieved the highest GAAP earnings of any company in the world has ever achieved that's investor owned. And we have the highest net worth of any company in the world, investor owned, any company in the world. So I would say, related to safety of principal over time, I feel good about it. And I feel good about the fact that 99% of my money's in it, and that it will be the source of all the philanthropic contributions that are made for 15 or dozen years after I die. So, but I do not think it will be in the top 10% of stocks performing over the next 10 years. I don't think it'll be in the top 15% of stocks performing in the next 10 or 15 years. I also don't think it'll be in the bottom 10% or 20% or 30%. So, but our ability to have a huge edge over the market generally with a $550 billion market value, it'll be minor, but it'll be done in a very, very safe manner.
Is an investment in the S&P 500 a better investment than Berkshire?
It could be. On balance, I think we'll do a little better, but it'll be minor. It depends on the kind of market we're in. If we're in a down market, we're going to beat it. I mean, that's simple. And sometimes we will be. The last 10 years we haven't been. But over 55 years it's worked, and it will continue working, but it will not work at all like it did when we were working with $100 million or $1 billion. There's no question about that. But we've got good businesses, and we won't be in the bottom quartile, I promise you that.